Mahindra and Mahindra seems to be on a course correction mode. The company, which had gone on a shopping spree of foreign entities in the past, is now looking to make an exit and consolidate. What is the way ahead for India's largest tractor maker? Utkarsh is here with the story. Take a look.
India's largest UV and tractor maker is now on a consolidation drive. With many foreign subsidiaries making heavy losses for the auto manufacturer, the company has now decided to exit them. And the new strategy is being led by Anish Shah, who will be taking over the top leadership from its longtime MD, Pawan Goenka, next year.
We're going back to what a capital allocation policy was for those 17 years where we had an excellent run in the market. And we're going back to tightening that up, making sure that there's a clear path for every loss-making business. Either it can make profits at an 18% ROE, in which case we will stay with it, if it has a path to doing so in a reasonable time frame, or it should have a quantifiable strategic benefit.
Mahindra has divided all its loss-making subsidiaries into three groups, A, B and C. A category companies are ones which have a clear path to 18% ROE and will continue to operate. Category B are companies which have delayed path to profitability but are of strategic importance. Category C are the ones with an unclear path to profitability, and those are the ones which the company will either exit or look at bringing new partners for.
We had losses in international subsidiaries start in fiscal 18. That became slightly larger in fiscal 19 and even larger in fiscal 20. Our cash generation was still strong. We actually generated a lot more cash over the last 3 years than we have prior to that in many years. But our EPS was hit because of the losses in international subsidiaries. So that's the reason why we have to tackle that head on.
M&M has been known to make strategic foreign investments, but the company has failed to turn around many of them. Last year itself, the company made losses of over 5,200 crores from its international subsidiaries, with SsangYong and Genzi contributing over 80%. And in the post-COVID times, where cash conservation is an essential component for survival, Mahindra is looking at going back to its core business and its core market.